This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, October 22nd, 2015. Euro dollar. So the euro's setbacks have been very well supported over the past couple of sessions, though ultimately the market remains under pressure on a medium-term basis after stalling out by internal key resistance ahead of 115. If we look back again to the May, June, September, and October, latest October high, the market has been very well capped ahead of 115, and this favors additional downside. At this point, key short-term support comes in by recent lows at 1306, and a break and close below 1306 on Thursday will do a good job of accelerating declines. Meanwhile, a break back above key short-term support in the 1387 area would take the immediate pressure off the downside and put the focus back on another retest of the 115 area. Ultimately, though, we need to see a break above 115 to take the pressure off the downside and suggest a more significant structural shift. Until then, the overall downside pressure remains intact. Sterling dollar. So cable rallies have stalled out just over 155, and the market is showing good resistance there, potentially in favor of a resumption of declines back down towards psychological barriers at 150. At this point, the market looks like it's been putting in a series of lower tops and posting a record 2015 high at 59.30, and a lower top is now sought out below 156.59 ahead of that downside extension. Ultimately, only a break back above 156.59 would compromise the bearish outlook for cable. Dollar yen. So dollar yen has seen a bit of a bounce in recent trade, though this bounce is within a well-defined consolidation. And if you look back to that high that we saw on the back in August at 121.74, the market within this consolidation has slowly been grinding lower. So a lower top is now sought out within this consolidation ahead of a bearish continuation, back down eventually towards that August low at 116.12. A lower top is now sought out at 121.74, and only back above 121.74 would compromise the bearish outlook. Euro Swiss. So Euro Swiss has been locked in some sideways chop over the past few months, though the market ultimately retains its recovery outlook and is favored to break higher above 110.50 and towards the measured move objective at 112 further up. At this point, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend despite the latest recovery that we've seen in recent sessions. At this point, the market is expected to roll over back towards that multi-year low that we saw just over 69, with only a break back above 74.40 to compromise this bearish outlook. Dollar CAD. So dollar CAD remains highly constructive, with the latest setbacks off 11-year highs being well supported by previous resistance going back to the month of March in the 28 area, now turned support. At this point, look for a continuation of gains back towards the recent 11-year highs and above in favor of that bullish continuation. Kiwi dollar. So Kiwi has seen a very nice rally over the past several days, though the rally is showing signs of stalling out ahead of 70 and even ahead of the 69 area. At this point, look for a lower top in favor of a continuation of this downtrend, with setbacks seen back down towards the 60 area. SPX 500. So the S&P 500 is showing signs of weakness after the market has stalled out ahead of some key resistance, or into some key resistance, some previous support now turn resistance in the just ahead of 2050. At this point, given the breakdown that we saw in August, this latest rally is expected to stall out in favor of a continuation of declines, ultimately back down towards a retest of that August low at 1833. Really, only a close above 2050 would compromise this outlook. Gold. So gold, despite recent setbacks, remains highly constructive following that break that we saw a few days back above 1170. The break above 1170 signaled a higher low at 1100 and now opens the door for fresh upside in the sessions ahead back towards medium-term resistance at 1233. Look for this current round of setbacks to be very well supported ahead of 1135, with only a break below 1135 to really suggest a delay in this outlook.